All right, we'll go ahead and get started tonight. I am Offshore Hunter in chat, Michelle in real life, and I appreciate you guys joining me for tonight's webinar. My internet where I live in Montana sometimes is a little funky, so I guess give me the heads up if the audio gets a little wonky. I think most of the time we make it through okay. So for those of you who aren't familiar with me, I head up the swing trade chat room for Nate and have been a member here at Investors Underground for, I don't know, I think 4 or 5 years now. And I day trade and I swing trade. I focus more on the swing trade side of things, but I day trade as well. And my day trades tend to be longer in nature, you know, than a quick 5-minute trade. They usually are trades that develop, you know, over several hours or during the whole day. So that's kind of the perspective that I bring. It's a little different flavor and trading style than what Nate has. And so that'll be the viewpoint that I'll be speaking from tonight. And kind of the format that I go through, I've got a bunch of questions that folks have sent in, so we'll go through those, and I've got a chart request. And then at the end, if there's other questions you guys want to go over, or if you have a few chart requests, I'm happy to take those at the end as well. Anyhow, with that, we'll go ahead and get started tonight. And we'll just go ahead and start going through the questions that have been sent in. Can I explain what makes me decide to pull the trigger on a trade? You post perfect technical setups, and it's tempting to just buy at your long bias points. But I'm wondering what other factors you look for when the stock hits that buy point. And then with that, there were kind of a couple similar questions, so I just rolled those ones that were the same into the same area. And then the other ones, what's my strategy for entering and exiting trades apart from enough volume? So what I'll say here is it depends on the setup that I'm looking at, obviously. And a lot of times with the setups that I post over in the swing trade room, I'm looking to buy a specific breakout area through resistance. And when I post my charts, I usually include those resistance levels and will say that I'm, you know, long biased through a move through 34, and usually, you know, or at 34. And so for myself personally, if 34 is the breakout level and resistance that I've been watching for the stock to move through, 34 would be the price, the exact price I would like to get it at. If I'm busy doing other things and I see it move and it's moved through, and it might be 34.05 or 34.10, depending on what my plan is and what my thoughts are for that setup, that doesn't make as much difference to me. I don't want to trip over dollars to try and save nickels in my trading style, but that's just myself. And again, coming from the viewpoint that I'm trying to do a longer type day trade, or I'm looking to swing trade something and looking usually for, you know, 50 cents to several dollars in the move. So for me, the exact price is less important. I would like to have that exact price, but I think it would be fair to say for myself personally, more of a price area, you know, and what I'm really looking for is a move through that resistance area with volume. The other thing that I'll look at doing as well is buying off support levels or looking to buy off overbought or oversold conditions and resets on my 60-minute charts. And we'll take a look at some of those later on in the webinar here. But for those that are over in the swing trade room, and I will say for anybody that's new to my webinar tonight, and just if you're not aware, you guys can have the momentum room and the swing trade room open both at the same time. If you just right-click on the swing trade room and say open in another tab, if you want to check out kind of what we do over there, it's a little quieter, you know, kind of slower paced environment, but we definitely have got some nice setups over there that work well for the swings as well as for day trades. And maybe what I'll do here is throw up a chart and just give you guys an example here. I've posted this a couple times. I think I put this out on Twitter today, and then I've also put it in the swing room. So a setup that I'm watching. And so here's an example. And the setups that I like to watch a lot of times are my 60-minute chart, which is what this is on HIMX, the lower left chart. I like to do the 60-minute chart with the blue line down below here is the 50-period exponential moving average. And the way that I use that is It helps me identify the trend in this particular time frame, and it certainly doesn't work perfectly all the time, but what this will often do is help me to stay on the right side of the trend with the stock, so that I'll be thinking in this example, because the price is above this, to be long biased off of pulls. And what often will happen with this moving average on the 60-minute time frame is, and in this example, you can see that it's moved up and got way above that moving average and needs to spend some time consolidating and digesting the move. And so what I'm watching for here now, and if this works well, is now that the price is consolidated and volume's falling off, and this moving average is coming up, that this will break higher, and that the 50-period exponential moving average will start trending higher along with the price. Now, that doesn't mean that it works well all the time, and this certainly could break lower, but these are the types of setups that I like to look for, is this consolidation above this moving average. And in this example here, I'm looking at this $7.94 to $8 area. Again, there's a little bit of wiggle room, and if you're more specific and want an exact price, you'll have to look at your smaller time frames and determine exactly, what price you would want it at. If it was me and if I'm trading this, sometimes I'll anticipate as well. So if I see some volume starting to come into this tomorrow or the next day, and this price starts perking up, I actually have on one of my other screens, I have an alert set up for this stock for myself at $7.85 and then also at $7.95. And so I might think about toe dipping here in that $7.85 to $7.95-ish area if I see volume coming in. Now, the issue with that is it doesn't always work. We get a lot of false breakouts or moves. So, but that is something that I do. Sometimes I'll anticipate the move. Sometimes it works. Sometimes it doesn't. So in theory, if you want to be safe here, is you're watching for a break over this resistance area, and ideally we'd like to see volume with that. Volume helps confirm that it is a strong move and not a false move higher, which we sometimes see. A lot of times if the move happens and we don't get volume with it, I'm a little suspect of it. It doesn't mean that it can't keep going, but I'm less fond of the moves when we don't have some good volume on those breakouts. And also I will say it depends on the time frame. The longer the time frame you're looking at, I think the more important volume is. If you're looking at a daily chart, and you're looking at an important area of resistance or an important chart pattern breakout, you really want to see volume come into that to help confirm that the move is real and you're not going to get some sort of funky move out and back down, which sometimes that happens. One of the questions also in with this was, so what do you do with your stops? So in this example, because a lot of times, and in a lot of my cases, because I'm trading a specific, buying a support area, or in this example here with HIMX, I'm looking to buy this breakover resistance, I will tend to keep my stops very tight, because what I don't want to have happen is have it be a false move. That being said, because I choose to do that, sometimes it will take more than one entry for me to get the trade to stick. So I will keep a very tight stop here, probably 10 or 20 cents, so let's just say that I buy this at 8. I will probably keep my stop at maybe 790-ish, 785, somewhere in there, because I want to either be right or right out, and I'm okay with having to re-enter the trade a couple of times if that's what it takes to stick. What I don't want to have happen is, think that it's broke out, just go ahead and ignore it and go on to other things, and then have it fall back down below the breakout area. So I do tend to keep pretty tight stops on those types of trades, just my personal trade style. So here's another example. I actually just looked at this tonight off of some of my scans, AXGN, and this is a daily chart here. And so again, the types of things that I'm looking for and the entries that I'm looking for are, here we have a trend line on the daily chart, which it broke out of today. So I didn't find this till tonight, so obviously I've missed that breakout, and that's okay. These things will, just because you maybe miss the first move, they will often retest, or they'll do some sort of retrace, or they'll set up again. So what I like about this, and looking at this tonight, and this is a daily chart, it's perking above the 50-day exponential moving average there, and we've also got some good volume coming in. And also on that one I checked, it looks like they've got a lot of insider buying. So just kind of another interesting one. But just to kind of show you guys some of the ways that I look for my entries. And I didn't have an example there of buying at support, but it's the same thing. So a lot of my trading is based around drawing lines, and that's what I do all day long, is draw lines. I draw support lines, I draw resistance lines, and mostly my trading is, I start out by looking at the daily charts, and then I break it down to the 60-minute and then a 15-minute chart. And I do trade off the 5-minute chart sometimes for my intraday stuff, but not as much, mostly because I have those specific price breaks, or resistance areas that I'm looking to buy, and so I know that that price area is what I'm looking at, and when it moves over that, I'm interested in getting in. So, all right, so next question. I'm having trouble holding a stock overnight. What factors make you decide it's time to sell? So I will say, and I've said before, exits are really the hardest part of the trade for me personally. And again, it's going to depend on a lot of factors. It's going to depend on the size that I have in the trade. It's going to depend on how quickly profits come. If I trade something and it makes, and I have decent size in it, and it makes a strong move very quickly, I will tend to take profits. And I've been asked before, do I scale in and out? Sometimes, but I tend to be all in or all out. Again, it's just the style. I've been trading for 13 years, and it's just the style that I've developed. I do occasionally scale some, but a lot of times if I do take profits quickly off of a strong move, I think sometimes that, especially as newer traders, you get in the mindset that, once you've taken a trade in the stock, that you need to move on to something else, or you don't want to trade it again. And for me, if the stock continues to act well, it'll set up again. So even if I take profits, if I see a setup that sets up again, I'm fine with re-entering the trade again. So I just think that, booking profits, certainly is important. And the other thing that I look for is, areas of resistance where it makes sense to take profits. So, as the stock moves up, I'll have resistance levels marked out above, and those are areas, at least for me, that you either, look to take profits or at least tighten up your stops. I also look to, overbought levels, especially if it comes in conjunction with a resistance level. I use my slow stochastics, which we can look at here. Let's see, HIMX, I'm going to get rid of this one, and we'll do, so MBLY, and so we did this one in the swing room, and this was the area that I was looking for, was the $34 breakout. And you can see up here at 38, there's some resistance there. So what I try and do is draw in areas above that make sense to possibly take profits. Now, the other thing that I will say here, and I have an example later on in chat in the webinar, but I'll talk about it now regarding taking profits. One of the trades, or one of the setups that I really like, especially for the swing trading, here in this example, the blue line again this is the 60-minute chart. The blue line is my 50-period exponential moving average, and what I like about this, or what is helpful to me with this particular setup, is when it works well, which it often does, when the price is below the moving average, you're thinking short biased. What I like a lot, and what I look for, either at the bottoms or the tops, and more so, because we're in a bullish market right now, that I'm looking for these types of setups where the price decline slows and the drop in this moving average starts to flatten out along with price. And what I'm looking for right in here is where that price starts to move back above that moving average, and we get what I call a change in trend here. So we've gone from being bearish to being bullish, and that's what I'm really looking for. And then, this $34 area had been resistance, and then it made a really nice move above there yesterday and went basically roughly 4 points if you played it perfectly, which never happens. But in 2 days, you got about a little over a 10% move there in that stock, which is, that's pretty nice for 2 days. But what this moving average will also help me do if you're trying to swing trade these for longer term is nothing goes straight up normally. These stocks will move up and they'll consolidate and pull back a little bit, and this moving average, should continue to move up, and we can start drawing in our trend lines here as well. So that's the other way that we can look at this to try and help us determine where to take profits or to help you stay in the trade if it's a swing trade on a longer basis. So this moving average, as it continues to move up and the stock price stays above it, tells me the stock is continuing to stay in an uptrend. We can start drawing in our trend lines, on the shorter time frame as well to help us. But those are the other sorts of things, and in this example, it made a quick move quickly. I would have definitely, taken some off here and let it reset. It may pull back a little bit further. I actually think this was on fast money tonight, and I didn't check it after hours to see what it did. But anyhow, so those are some of the examples of how I take profits, or how I find my exits in the trades. Like I said earlier, it's always the hardest part for me. I never get as much of the trade as I want, and I try and remind myself that if I can just catch the middle of the move, that's good. I mean, it's hard to catch the exact bottom or the exact top, but if you can just focus on getting the meat of the move, you'll be doing fine. So anyway, so those are the factors that go into me trying to decide when it's time to take profits. I think that scaling is a very good idea. I'm just not very good at it. So I know a lot of people do it. I certainly think that that's a good way to do it. Take half off and let the other half run. I think that's great. So newer traders probably focus on that and don't be as much like me where you're all in or all out. So what is my stop loss strategy? I talked about that before. I tend to keep my stop losses very tight because I'm trading specific chart pattern breakouts, bull flag breakouts, ascending triangle breakups, those types of things, and I want that breakout to hold, and if it doesn't, if that breakout area doesn't hold, then I'm out. And I can reassess at that point, and if it takes a couple tries, sometimes the breaks are not clean, sometimes the pattern breakout is a little sloppy. I can show you an example here. Let's look at SOHO, because that is an example that I had up on my blog as a trade idea. And let me put the daily chart up here. And I'll show you what I'd been looking at and how it was a little sloppy on the break. Okay, so trend line, I had my trend line drawn like this. This is a daily chart. So this was what I was watching. Let's zoom that in so you guys can see. So what I had seen here in the daily chart is basically some bottoming action, the chopping back and forth, the 50-day exponential moving average flattening out, and the price finally moves above it, and I was looking for this move above 58. So I had 58 as my breakout area, and you can see right in here how we get some little tails above and below, and so that can be not as clean always as we'd like to have it, and you'll have to decide in your own trading plan and your trading strategy how you want to handle that. Sometimes I will give, if I have smaller size, I tend to give it a little bit more room. If I'm trading bigger size, I tend to keep it on a very tight leash. So, there's an example of the setup was there, it broke out, it came back down below. It took four tries, I guess, for this to really stick. So you can see how I can't tell you exactly how you should do it. I'm just telling you what I do. And so in that example, it probably would have been several tries for me to get that to stick, and I understand that. For newer traders, if you're comfortable giving it a little bit more room, I think it'll be less frustrating. But for me, it's important that the move sticks and that it goes. And if it doesn't stick and falls below, then it's off, or I'll reassess and keep watching it if I think it needs a little bit more time. But there's an example of where the breakout wasn't real clean, and it took several tries for it to get moving higher over this resistance level that I was watching. So anyway, so my stop loss strategy, I tend to keep my stops pretty tight. And I will say there too, it also depends on the size that I'm trading. More size, less leeway. Smaller size, and a lot of times, again, if I'm buying a support level, if I'm looking for something, for example, if it's an ascending triangle and I'm playing the moves within the triangle before it breaks out and that stock continues to come down to the lower area and retest that support line, I feel like off of a oversold condition at that trend line, that's a good risk reward area to try and buy at, and so I will do that. But again, I'll keep my stop pretty tight at that trend line in case I'm wrong, because I either want to be right or right out, just how I play it. So okay, so during the previous webinars I've said to look at the FinViz groups and sectors, but not really specify exactly what I do with the information and how they relate to my strategy. How do I consider sectors and industries during your scans? Blah, blah, blah. Okay, so my point in saying you can use FinViz to look at the sectors, I like it because it's just finviz.com. You can look at sectors and industry groups in there. And the reason that I use that as a tool, and I don't use it all the time, but it can help you identify the strong and weak sectors. And the money rotates from sector to sector throughout the year. I mean, solars will be strong for a while, then natural gas, then cloud plays, then China plays, and the money just continues to rotate, to different groups as, the group that's in play, solars, gets overbought and overheated and needs to rest and pull back. The money's going to go somewhere else. And we're all traders and not investors here, so that's what we're looking for, is we want to try and follow where that money is going, and to figure out, what plays may be available in there. So it's just a tool. FinViz is a tool for me because I trade technically. I like to look at charts and the format that they will pull those lists up in. I can look at them in chart format, so I can scan through them really quickly and just pull out the ones that look good to my eye on the daily charts. So anyway, so I just use it to help identify strong and weak sectors and kind of see where the money's going. And then within that sector that might be moving, it's a way to look for maybe some of the lagging plays after the bigger cap, or the initial plays move within the sector. There's always the secondary moves. You can pull those sectors up and look at the stuff that maybe hasn't run as much and look for some secondary plays after the initial plays pull through. So, do I use a hedging strategy? If not, why? No, I don't use a hedging strategy. It's never been part of my trading plan. And I guess here I'm a trader and I'm not an investor. I don't do options. I know some people do some hedging with options. And my holds aren't long term. I am in stuff for during the day or for several days or maybe up to a few weeks. But I can manage my positions as needed because I'm here every day, and as the market changes, I don't ever hold through events such as earnings, or if I know, if you've got some kind of a pharma play and you know that they've got a trial date coming up where they're releasing data, I don't ever hold through that stuff. And obviously being a swing trader, there's, times that, news comes out that's unexpected, but I don't ever hold anything through any sort of news-related event that I know is coming up. So I don't do any sort of hedging. During your recent webinar, you say you don't consider fundamentals unless you're taking a position for quite some time. How do you process that information in relation with your strategy? And I was interested in the percentage of institutions owning a stock. What benefits knowing this value that might add to the trade? So I would say that I trade 95% of what I do is technically off charts, off of the lines that I draw. And the way that I consider fundamentals in my trading, in my swing trading is, for example, if there's strong earnings or really positive news, what that does for me is it confirms the strong price action that I'm seeing, you know, and also increases the likelihood that that price action is going to continue to follow through to the upside or to the downside, you know, if you're shorting something. So I will look at those sorts of things. I don't spend my evenings reading their 10Ks or anything like that. You know, I might glance through the earnings report just to get the gist of it if it's something that I'm going to swing and it's had a positive move. I do think that for me, you know, the float can be definitely a consideration. If something's low float, when it gets momentum, that's definitely of interest to me because it changes my perception of how much momentum something can have because those low float stocks, when they get news, you know, obviously can make some crazy moves. So that is important information to understand because if you're going to be trying to short that and the float is low, you might get just run right over. So those are the sorts of things that I take into consideration. The other thing, you know, is the short interest, you know, and just knowing that if news comes out that it can lead to short squeezes. I think that's, you know, I look at the institutional support on swings sometimes, especially if it's something that I'm watching for a long time. Some of these setups take months and months to develop, and so, you know, I'm constantly, not every day, but, you know, weekly, you know, maybe checking the stock, you know, and I'll look through just some of their basic fundamentals. You know, I'll look at the institutions. If that's growing quarter over quarter, you know, it can help confirm strength or the chart action that I'm seeing. I don't spend a lot of time doing it. Those are just a few of the things, you know, that I do take into consideration. I don't spend a ton of time on them, but a lot of times if it is something that I'm going to swing, you know, or something that's acting really well, I may be interested in going, especially if it's a new stock maybe that I'm not familiar with. I'm just interested in glancing through the news and, you know, checking the float, seeing if, you know, do the institutions hold a lot? Do the other thing that I mean, I mentioned on that AXGN tonight, when I pulled that up on FinViz, I mean, it takes 2 seconds for me to scroll down to the bottom, and I can see the insiders buying on that. You know, that's of interest to me. You know, if the insiders are buying a lot, especially if they're buying a lot recently, you know, that's definitely kind of a, you know, heads up for me, you know, that if they're buying, I mean, it doesn't mean anything for sure, but, you know, it's certainly a positive sign, I guess. So anyway. All right. Next question. Sometimes volume doesn't follow price action. Quite often I see a break out or breakdown without any significant confirmation. Should we solely stick to patterns who are clearly followed by volume? I touched on that earlier. I would agree. You know, I would say I don't think you should solely stick to patterns because, you know, that are followed by volume, because sometimes stuff can continue to move without, you know, huge volume coming in, but I definitely prefer that the chart breaks or the resistance areas break up or break down, you know, is confirmed with volume. And what I will say, you know, and the lack of volume sometimes can lead to false breakouts or breakdowns. So I definitely am a little bit more suspicious of stuff when we don't have volume coming in. You know, so it's not 100% rule for me, but I try to consider that when I'm taking a position. And I will say too, a lot of times volume will precede the move up or the move down depending on the setup. Sometimes I'll be watching a setup and you'll see volume start creeping in, and it doesn't mean that it's huge volume, but all of a sudden, you know, on those up days, the volume is increasing, you know, and then you'll get your big break or there'll be news that'll come out. So, you know, I think volume is definitely something that I watch and a big consideration in my trading, or part of it. Do I ever stop and reverse my position? Any particular situation for doing this, or should it be avoided at all costs? I guess I would just say here, I try to be flexible in my thinking, and I don't focus on this. And, you know, if, for example, if you have a triangle pattern and it's getting very close to the apex and it starts to break up and then it falls back down, you know, if you get a false breakup and then it reverses and goes down, you want to try and be flexible enough to understand, you know, that you can switch from long to short, and there's nothing wrong with that, but it's not something that I focus on. I think for myself, I was just trying to think how I handle those things. I think a lot of times if I get stopped out of something, unless it's news related that reverses the direction of it, I tend to kind of just move on, because if I'm biased I try and be flexible, but if I'm biased in the direction that I think it should break and then it doesn't, I think sometimes maybe mentally I'm just not in a good spot to trade that, and there's always so many other opportunities out there that I'll tend to, just move on to that. So, and it depends on, the time frame that you're trading as well. When I'm speaking to that, I'm thinking of daily charts, but obviously intraday, there's probably a lot more opportunity for that, and so certainly something you can think about. I don't spend a lot of time thinking about it, and I've done it some, but not something I focus on. So looks like I focus more on small caps, avoiding most of the blue chips. Why? What's the main difference between the two? So the blue chips just tend to be slower movers, and that's fine. It's just with my personal trading styles, I'm looking for movement. I want stuff moving, so that I can be making money, hopefully. And I will say it also depends on the market and the rotation. So, there's times when the smaller caps are out of favor, I'll look elsewhere. And I think on my blog and stuff, I will say, I don't tend to focus, I guess, on the Googles and the Teslas and the Netflixes as much, because it seems like more people are, maybe have smaller account size and don't feel like they can trade those as much. So I think that I tend to look towards, the 10 and under and $20 and under. I get some of the stuff in the middle too, on my blog, and what I try to do, I guess, is have a little bit of a variety out there, because I know everybody, some people like to trade the cheaper stuff. And I will also say too that one of the chart patterns, or one of the things that I really like, is stuff that's coming off the bottom. And a lot of times that tends to be some of the smaller cap stuff. So that's just part of my own personal style. But I do try and, have some of a variety in there, and some of the 30 and 40 and 50 or, $60 stocks as well. But I know not everybody, depending on their account size, feels like they can trade those. So I do try and, have some of the smaller cap stuff in there. But if they're out of favor, we got to play whatever's working. So, earlier this year, a lot of the momentum stuff that was pretty pricey, made some huge moves down, and I was focusing more on that stuff earlier in the year. So just kind of depends on what's moving. Okay. How many monitors do I use, and do I use multiple? What do you have up on each screen? I use multiple monitors. I have charts on each screen, and I don't have enough monitors. So there's a picture of my setup. I have, let's see, I think my middle screen is a 24-inch, and then I have two on the side that are like 21.5. I also have a laptop too. So in the picture, my laptop's not there. It's, well, you can kind of see it. It's on the left. So my laptop, I have chat running, and Twitter and my email and those sorts of things. And then I just have my Thinkorswim platform up, on my desktop with all my charts. And so in my charts, like that middle, there's layers of charts behind those charts that you see. So I can just, down at the bottom of my screen, mouse over each different page of charts, and there's probably 60 or 80 different layers of charts behind there that I can quickly mouse over and look at each of those, and that's what I do all day long, is look through them. I would like to have a whole wall full of monitors, and that would make me really happy, but I don't have that. So yeah, that's Bella. She was running the show this morning. So anyhow, that's my setup, and I got my TV behind there, and you don't see all the dog beds that are laying underneath my desk there. But anyway, so that's my setup. I would like to have a few more monitors, and I'll probably add a few more, I don't know, sometime in the future. I can't decide if that'll just add to the confusion or not, but I would like to have more real estate for more charts to look at. So anyway, that is my setup and my screens. Okay. My results at intraday trading have been disappointing. I find that my swings tend to do much better because I have wider stops and give them more time for a bigger picture idea to work. However, I'm concerned about the amount of income I can generate from swing trading versus day trading. Is there any reason to think that swing trading is less profitable than intraday scalping? So I think, obviously here it depends on the trader. I think that there's people who day trade and are hugely profitable and people that swing trade that are hugely profitable. I prefer swing trading, so, I think that what swing trading can do is give the trade more time to work. And a lot of times, and even in my own trading, when I look back at the setups, I always think, oh, I wasn't patient enough. Look at it move $10 and I got $4 of the $10 move. So it's always hard, hindsight's always 20/20 for me, and to try and focus on remembering to try and get the meat of the move and not trying to be perfect in my trading and knowing I'm not going to be catching the exact top and the exact bottom. But I think absolutely swing trading can be profitable. What I will say here is that I think the hardest thing with the swing trading is, well, two things. I think it seems like a lot of people have a big fear of holding overnight, which I understand. I think that I would be thoughtful in my stock selections, especially if you're a newer swing trader and what you're holding overnight. Some of these spec plays or, some of the biotech, I'm not saying you shouldn't hold them. I'm just saying, maybe be a little bit thoughtful. News can come out at any time, and that's just part of it. If you don't like that, you can trade the ETFs. There's ETFs out there for every single thing out there at this point in time that you could want to trade. So that's an option, and it doesn't mean that all of the risk is gone, because obviously there's always market risk. But if you really want to swing trade and you're really nervous about holding individual names, try trading some of the ETFs. There's like I said, a bunch of them out there, and that will help mitigate the individual stock news risks, such as an earnings warning or the CFO leaving, or muddy waters coming out and having a bad report on them or whatever. So so that's the first thing I would say is to overcome the fear of that. The second thing that I will say is patience. And it is really hard, I think, especially as a newer trader, and even for myself, in swing trading, because you want it to go to your price target immediately, and stocks that are acting well and acting healthy don't go straight up. They move up and they pull back some and consolidate, they digest the move, for a day or two, and then they'll move up again. And usually when I look back, if I started something Monday, and let's say I don't hold it for 2 weeks, and I look back, over that 10-day period or 12-day period, I really wish that I had just held it and gone on vacation for those 2 weeks, because the patience in giving the trade time to work, as long as it's working within the parameters, for example, the 50-period exponential moving average and within your trend lines, if you can use those to help you stay in the trade when those trades are working, I think that they can absolutely be very profitable. So anyway. But patience is hard, and part of the reasons patience is hard too is if don't sit and stare at your swings all day. It won't make them go up faster, and it will drive you nuts, because you'll start looking at the 5 and 15-minute charts, and you'll probably freak yourself right out of the trade, because it'll pull back 15 cents and it'll look like a lot, and you'll think the world's falling, and you'll sell it, and you'll look back, like I said, a week later, and it'll be up $5, and you'll be banging your head on your desk. But it's also hard too, because you sit and watch, you make your selections, or maybe you buy one stock and then you buy another one, but stuff's moving all day long, and it's hard to sit and be patient in your trade when you see other things moving, every single day, that you think, oh, I wish I had part of that, I wish I had part of that. So that's a big hurdle, I think, with swing trading, is being able to sit still in the trades as long as they're acting as expected, and continuing to do what you think they're supposed to do. So so the question in chat, again, it goes back to those trend lines and that moving average, and what your plan is and what your time frame is with that stock. So if it's made a really nice move intraday, and you want to book some profits, you have to figure that out on your own. I can't answer that question for you exactly, and it's always hard to know. If something's made a really nice move, if you've bought it early in the day with the intention of swinging it, and it makes a very nice move intraday, it's probably not unexpected that it may give some back at the end of the day. Draw your trend lines and your moving averages and look at your overbought and oversold conditions to help you make that decision. And what is your resistance above, because it's just not going to go straight up. Every single swing trade is going to pull back some. And you have to understand why you're in the trade, and you have to understand, is it acting as expected? If you are trying to swing trade off of 1-minute charts, it's never going to work. You're going to have to back out your time frame in order to swing trade, because you will never be able to swing trade off of 1- and 5-minute charts, in my opinion, because the time frame is just too small. So you've got to be looking at, I mean, like I said, I start by looking at the daily chart for my setups, and then I break it down to the 60-minute chart, and then the 15-minute chart sometimes to help with the entries. But that 60-minute time frame, if you want to swing trade, can be very helpful. And you've got to draw your trend lines to help you decide whether or not you should stay in the trade. If it breaks that trend line going into the close that you've drawn and you want to sell, then sell. You can always get back into it if it moves back above it. And that happens. Sometimes you get those moves and things dip a little further than what you think, and it's just part of the game. There's nothing, sometimes they act great and they come right to the trend line and they move off of it and they act beautifully. We can look at, let's just look at this really quick, because this was another one that I had on my blog. INSY, yeah, so we can look at that one, the INSY. So here's ATHM. So, and this is a good one. I think I actually have this I probably have this at the end of the webinar as an example. I think I do. Let me look. I do. Okay, so we'll talk about that in a minute. So let me answer this next question and we'll move on to that. So being a swing trader, do I monitor my trades all day? I monitor them because I'm here. I try not to stare at them. So if you're staring at them, you're going to probably sell too soon. So the example that I was going to show you, I already had it in here with stuff drawn on it. And this was yesterday, so it doesn't include, because it moved down today. So how do you know when it's time to lock in profits and instead of just letting it ride? So with ATHM, I mean, here's a good example of exactly what you guys are asking in chat there, whether it's INSY or ATHM or whatever. So you can see here a couple weeks ago, it made the move above the 50-period exponential moving average. It moves up, it consolidates, it makes a big move up. So there's an example there of, and it moves up and it's flagging. So there it would have been really hard, because I would have, even though it had made the big move up, personally I would have been thinking it's going to break higher, and then it gaps down on Tuesday. And I don't know what that was for, if it was earnings or what it was. So there's an example, on that gap down, if it didn't move back above the gap, where I would definitely be locking something in. But it moves back to the trend line, and then it kind of fiddle farts around for a little bit, and really there's no play there during this time. But then it gets its act together and gets back above this 50-period exponential moving average again. And you can see here, so this was a week ago, so Monday, Wednesday, this was almost, not quite 2 weeks ago, 6 or 7 days ago, whatever it was. So this would have been 7 business days or whatever that comes out to be. But it moves back above this moving average, and you can see here in this example how this thing acted really well. I mean, you can draw, I didn't draw the trend line in here, but I could have a trend line drawn in here. It broke it today. We can look at that next. But my little pink arrows here show you where, if you buy the break above and you stay in it and you just keep moving your stops up, and I've got resistance here marked and it keeps breaking above it and staying above it. And on the daily chart, 50 was actually the previous high. So I had said, definitely, I mean, you should be locking some in there, and maybe it'll go higher, maybe you take half off, whatever. But there's an example of how if you had started into this, it made a great move, and then you get this. And how you manage that is going to be up to you, because that's always hard, because here you've got some big gains. You know, for me, I would be locking some in, and I would just be reevaluating and feel for it. Yeah, that's my technical term. Let's look at it. So here is today. So there's our 50-period exponential moving average, and there's the trend line I would have drawn, because this thing was staying way above the 50-period exponential moving average. This green trend line, if I was in this, you know, this whole way, that is, you know, and if you're playing it perfectly and not staring at every move that it's making and watching JRJC go up $4 in one day and driving yourself insane, you know, this trend line should help keep you in this trade. And when that trend line breaks, you know, here's the problem. The trend line breaks, but it's still above this moving average. So it's still bullish. It hasn't changed trend yet. It's broken the shorter term trend line, but, you know, if you've caught in the meat of this move, that's 10 points in 7 days. That's over 20%, 22 or 25%, whatever that comes out to, doing the math in my head. But I'd definitely be locking in some there. And, you know, you can always re-enter the trade again if it is digesting the move and it stays above this moving average, and maybe it consolidates here for a while and this moving average catches up and it wants to push higher. That's at least how I would view it. You could ask 10 other people their opinion on it and you would probably get 10 different answers, but that's how I do it. Those are the types of things that I try and use to help guide me, you know, and they're guides. I mean, there's no book that says this is exactly how you should do it, and it's easy to say how you should do it when you're looking at a chart that's already done. So what's hard to do is to be trading it as it's happening, because none of us, or at least I don't have a crystal ball to be able to know 7 days ago that ATHM was going to go from, you know, let's just call it 40 to 50 in 7 days. So when I get that crystal ball, I'll have a sign-up page and I'll share it with you guys. Oh, okay. Well, we need to get it back from him, because I think it's got some cracks in it. It's probably dusty. So anyway, so INSY2, let's look at that, because that was the other one in the swing room that we had talked about. And so the question, I want to make sure I get it, the morning wash, again, the trend lines, you know, we've got to have the trend lines and the moving averages, and I don't think they're guides, you know, and that's what's hard, is nothing works perfectly. So I'm showing you, or just trying to share with you, the tools that I use, you know, to try and help guide me, and what these are helping me determine is the stock acting as I would expect it to act? Because that's what you want to ask. If you're trying to swing and you're trying to give this room to work, is it acting as you expect? Well, for me anyway, how are you going to know that without drawing some lines on your charts? Because if I'm just looking at price, I would have no idea. So I need to draw my trend lines, and for me, I need to have this moving average to try and help me see that. And again, that moving average, it doesn't work well all the time. In some of the charts you put it on and there's lots of moves up and down below it, and if that's the case, then I probably would rely on my trend lines. And so, and the more points of reference you have when you draw your trend line, the more important that trend line is, in my opinion. You know, if you just have 2 points of reference on the trend line, you know, it's a little sketchy. If you have 3 or 4 or 5 touches against that trend line, the more important that trend line becomes if it breaks below it, or, you know, if it's a resistance line, if it breaks above it. So, you know, the trend lines are important, the touches to it, and if we put in here the slow stochastics, and so you can see here, oh, this isn't a very good example, but, you know, so in this example right here, up at the $34 area, we've moved quite a ways away from the trend line. You can see with the slow stochastics that it's overbought somewhat, and the price resets. So we go from 34-ish down to 32, down to the trend line, which corresponds with being overbought in the slow stochastics, which tells me it's acting as expected. So it should lift from here, which it does, and it's always easy to say this in hindsight, right? So I sound like a Like I know what I'm talking about, right? It's always easy to do in retrospect. But it's oversold there. It moves off the trend line. It gets overbought. What does it do? It comes back. Now in this example, it's broken the trend line, but it's also oversold here. So, it's still above the 50-period exponential moving average. So there it's a little bit of a gray area. You're going to have to figure that one out on your own. How do how much profit do you have? How much cushion do you have? I think the other thing I'll say here is the more cushion I have, the more flexible I am with giving it a little bit more room. So it's harder. I think that's for me too why it's really important, why entries are really, really important to try and get the entries right. Because if I have a good entry that makes sense and I understand why I'm getting into the position, I'm confident in it, hopefully I'm profitable more quickly than if I have a bad entry. And then as the price moves higher, the more cushion I have, the more, within reason, the more room I'm willing to give it. So, this isn't a great example here, but let's just say, I had gotten in here at 28, which I didn't, but let's just say that you did, and it's moved up to 38, and it pulls back to 34. I don't know, that's a 10% pullback, but, and it's a little, it's still above this moving average, and I'd have to look at the day. The thing is, if we look at the daily chart, that's the other thing, too, is I want to look, I use multiple time frames. So I would say, am I going to give it the room? Am I going to take it off here and rebuy it here? I mean, that's the other thing is, you're swinging this, if you want to swing for a day or two and take it off and let it reset, if that's what the price action is doing, that's up to you too if you want to have just a day or two swing. So here's the daily chart on this. And let's see. So that kind of, when I look at that kind of makes sense to me. Now on the daily chart, it's getting overbought. So, I mean, you have to take, or you don't, I try to take those things into consideration in my swings is, to look at more than one time frame, look at the daily chart too, with that ATHM on the daily chart, I knew that 50 was going to be some resistance. So that, as the price continued to move higher, move your stops up, it makes sense. And at 50, you do whatever you want, but that makes sense to me. And in this example here, so it's moved down and currently is retesting what had been a breakout area. So that makes sense to me. And it rejected at an area that was resistance. That makes sense to me. And actually then on the daily chart, and the lines always change a little bit. So on the daily chart here, the trend line would be a little more like that. And so that makes sense. But when I look at that, that breakout area, this resistance area that it broke out of needs to act as support. So if it doesn't, then I would be taking that off. Anyway, okay. So I get sidetracked sometimes. So there's some examples. Hopefully that made sense. So now I just had one chart request that came in ahead of time, and it was for RAD. So this is how I look at when I'm scanning or when I'm looking through my chart lists of stocks, looking for things. I always start with the daily chart, and all my stuff is stored in stock charts that I look through. So RAD on the daily chart, and I think, yeah, this was yesterday. I should have done today's chart on it. Well, as of yesterday, when I put this chart in, this is what so we have, in this example, it's setting lower highs, which is bearish, and it's moved below the 200-day moving average, which is also bearish. It fell below on heavy volume, and it's coming up to retest from below. Typically, so now I'm curious, of course. I want to see what it did today. So nothing. Okay. So typically on these, when they retest this 200-day moving average area from below, they may spend a few days as this moving average rounds out and starts to head lower. They may spend a few days or maybe even a week at this level. It should stay below this trend line and not go any higher. The MACD here is below 0, which is bearish, and it has a negative divergence. this should want to go lower. If I'm wrong, and so this is what I try and say is, what are my two options here? That's what I see in the chart as of yesterday, and still today confirms nothing has changed. So the chart is bearish. It should want to go lower with time. If I am wrong, I'm going to know I'm wrong if it breaks over this blue line and moves higher. So there was an early question about, you know, reversing your position. Well, if you're short this, I don't know whether this person's long or short, you know, but if you're short this, that blue line is where I would want to be out and be wrong, depending on where you're in from. But if you're short and you're wrong and it moves over the blue line and you want to flip to long, then that would make sense. And I think I did a 60-minute chart on this as well. So here's the 60-minute chart, and again, you know, the trend line with the lower, setting lower highs here. And in this example, and so here's an example of where the 50-period moving average doesn't always look as smooth or as nice, and maybe is not as helpful because you have a lot of moves above and below it. So when I have charts like that, I just tend to ignore that if it's not smooth. It works on a lot of charts. It doesn't work on all of them. But again, you know, so you see the blue line, and it should want to move lower and reject off of that. So that was my thought on RAD. Anyway, that is what I had prepared for the webinar. I'm happy to take other questions, or if you want to go through a few charts, we can do that. It seems like my hamsters tonight are working pretty well, and it's not taking minutes for my charts to come up. For some reason, this the webinar now application, when I open it up, bogs all my other stuff down a lot with my J.C. Penney. I like J.C. Penney. Whoops. As long as it stays over 10, but we'll look at the chart. Yeah, JDST. So J.C. Penney, here's a daily chart. $10 was $10, you know, and again, 10, 40-ish. I mean, sometimes the points are not exactly, you know, there's some wiggle room there, but setting higher lows, broke above 10. It needs to stay above 10 for me to keep liking this. The RSI is getting a little bit up towards 70 and maybe slightly overbought, but I think with time, this one goes higher, especially above. Let me just do a bigger chart here real quick. So here's a year-and-a-half chart. You know, it's above the 200-day moving average. It's done the little golden cross, so that's bullish. This area back here from 13 down to this 1050 area is pretty thin. And what I mean by that is that it didn't spend a lot of time in that area. It traveled down through that area and heavy volume quickly. So when the stocks break back up into that area, typically when they don't spend time and there isn't price memory there, they'll want to move more quickly back up through that area. So I think back to the $12 area is your next resistance here. And then above that, I would be looking at 1450-ish to 15. You know, and it may be a slower mover. And if it gets, you know, it's heavily shorted, everybody thinks they're going bankrupt. And it's perfectly ripe for a good short squeeze. So I like this as long as 10 holds, though. That's would be my line in the sand on that one. So JEST I have up right here. So we'll look at that. Yeah, the webinar is being recorded. So this is a 60-minute chart on JDST, the upper right chart here that I'm watching. And it's in a nice range. And I'll show you a chart that I just drew in a minute on it today. It's not on my Thinkorswim platform. It's in my stock charts that I really liked. So right now it's in the range, and so until it either breaks down below this lower trend line support or moves above the upper trend line support, it's just in a range. But I will show you another chart that I have of it. Actually, I'll just pull it up this way because otherwise I don't know which page it's on. Oh, nice. Okay, so here's JDST. Here's the daily chart of it. So again, here is what I like about this is the consolidation, the tight consolidation here in the range we were just looking at on the 60-minute chart. The MACD is still below zero, so it's still bearish, but it is slowly moving up towards zero. When the MACD is below zero, it's the stock price and the chart pattern, you know, it should be headed lower. When it's above zero, it should be bullish and trending higher. So, but what I do like is the price is consolidating and flattening. It's not declining anymore, and the 50-day exponential moving average, while still coming down, it's slowing its descent, and it's making me wonder. Let me do, I'll have to change my settings here, but the 60-minute chart, there it is. So this was what I thought was, let me zoom this in so we can look at it. So sometimes on my 60-minute charts on stock charts, the red line is the 200-period moving average, which is also something I sometimes like to look at on those. And that's interesting to me there, because it's been obviously very bearish, declining, and those two moving averages are getting very pinched, and it's actually moved above it. So I'm very interested in this if it can start moving higher. So I'm watching it. Currently in a range, but getting very interesting. So yeah, so soda. Let's take a look at it. I think we looked at it in the swing room today. So here's the daily chart of it, and popped above the moving average and above some resistance here. But it looks like it actually closed below resistance on the daily there. But it set higher lows, so we like that. Let's look at the 60-minute chart. The thing that I will say about, you know, the setups, if you miss the initial move, I mean, it certainly doesn't mean, I mean, we'd all like to have the most perfectly low price and the most, you know, sell at the very top and buy at the very bottom, and it just doesn't always happen that way. And if something is acting well, it will set up more than one time. So even if you miss the initial move and you continue to follow the stock, usually off of an sold level, you know, back to trendline support, it's going to offer another entry. So you may not have gotten, you know, the perfect entry today, but here's my 60-minute chart, and I would, you know, you can draw in the lower trend line here, and it got a big pop intraday here, but basically kind of closed right at the resistance area here, the way that I have it drawn. But it is flagging, so I think that the next option here would be to buy the break over, let's see, that's 34.86, 34.62, you know, depending on how you draw that, you know, you could buy a break higher of that flag. So that would be your other option if you know, felt like you missed this today, if it's going to push higher again. Now you can see on this 1-hour chart, what I will say for those of you who aren't familiar with the slow stochastics, the overbought and oversold levels work in a trading range. When a stock chart starts trending hard, the stochastics can stay overbought and they can stay oversold when it's declining. So just understand that in a hard trending stock or market environment, those slow stochastics will not work as well because they will stay overbought or oversold. When a stock has got a trading range and a chopping range, like with JDST, I can put that up on there for you to see how useful that can be in those trading ranges to help you trade those ranges. So people will say, well, you know, do I have to wait for the pattern to break? You can do whatever works for you. A lot of these patterns that set up, these triangles and these ascending triangles, will offer some nice ranges, and the thing that's nice about that is they can offer either some nice day trades or some nice very short swings off of these overbought and oversold levels if you choose to play it that way. Anyway, so on soda, it is overbought here, but looking at this flag, if it stays overbought and it breaks higher, then just understand that it's trending and that's okay, and that's to be expected. So if you're not familiar with that particular technical indicator, make sure you read up on it and get familiar with it. And all of these, the MACD and the slow stochastics that I use and my 50-period exponential moving average, they're just guides, you guys. I mean, those are my tools that I use to help me try and decide, you know, if it's acting as expected. So they're not the holy grail. I don't rely solely on one. I try and use the tools that I have to help me put a plan together, or a picture together of, are things acting as expected? So, okay, Noah, and then CCHI. Noah, I think, had a big down day, if I remember right, today. Yep, big break lower, probably off of, was it off of earnings? I can't remember. Anyway, so this, I actually had this on my blog because I liked this and it was breaking higher and acting well, and I even think I said that if 16 didn't hold, it was off the list. So a big break lower today on heavy volume. So if you're looking to, if you're already short, great. If you're looking to short this, I would be, let's look at the 60-minute chart. Yeah, I think I'll take a bet on CCIH the opposite direction maybe this time, Tim. He and I had a little side bet. He ended up owing me a beer or two, which worked out fine. I think I just got lucky, but you know. So on the 60-minute chart on NOAA, I mean, that's a big break lower and it's pretty oversold. So for me right here, it would be hard to put on a trade. I'd be wanting to get some kind of a bounce. You know, maybe it gets a bounce back to some resistance here in this 1540, 1550 area. So I think you would have two options here. I'd be watching for a bounce and have it get overbought for a possible shorting opportunity. The other option is, if it just falls out of bed, is to short the break of today's lows with a tight stop. I don't like doing that, and I probably would just pass on it rather than play it that way. I'd rather have a bounce to short into. Okay, and then CCHI. CCIH, sorry. Hamsters are getting tired. Oh, there we go. Okay. So I think that T530 alerted this in the chat room, in the momentum room today, that there was some options stuff going on with this today. Nice volume, moved back up through the 200-day moving average. I like that. I don't know if earnings are out on this or not. So here's what I would say on this. You know, we've got a positive divergence down here on the MACD, and it's sneaking back above zero, so we like that. And I could even draw a little short-term trend line that it's broken up through. So I looked at this today trying to think about whether I wanted to play it or not. And I decided to wait to see how it would set up. So there's a lower trend line. And it's going to have some resistance, you know, obviously a little here, and it's going to have a little here. What I would say here, I guess I like this. I think that I'd like to see it set up. Maybe it will flag out. I think that the options here would either to be buy some sort of a quick pullback in the morning, maybe to that 1450 level, or the other option, if it just consolidates sideways, is to, and it flags out, is to buy the break higher, knowing that you're going to have some resistance just above. But I do like this. I think that the chart here is interesting. I can't remember what the float is on this, but obviously it had a big run earlier this year. So especially if it can get above the $17 or $18 level, you know, then things could start moving pretty quickly to the upside. But I was a little hesitant on this today just because the market is so extended on the upside that I'm a little less inclined to be putting on a bunch of new stuff right now. So anyway, I think I got all the questions. If I missed something, go ahead and repost it, but I think I did get all those. Okay. All right, any other questions or a couple more charts?